Oh no, the Hindenburg omen. It's signaled twice in the last 2 weeks. It's got to be a top, right? This indicator is called 47 of the last 2 crashes. Guys, relax. This thing only has a 25% hit rate, meaning that 75% of the time it is signaling a false positive. Guys, there is no one indicator as a market up top. Calling top is extremely difficult. The only chance you have to be predictive into this market is to build scenarios off of market breadth. Look under the hood, sector by sector, find strength, weakness, and help build yourself the 2 scenarios you see most likely to come. And that is exactly what we're going to do here today in our watch list video. It will be slightly longer than normal, but we're going to take a look under the hood and do some sector analysis, some breadth analysis, some scenario building, and I will end with a watch list of a handful of triple R triggers on the weekly that I am monitoring should we get our scenario to the upside and decide to put on more risk for a push into year end. Which, teaser alert, I do more favor a bullish push into year end, but there is some signaling out there that we should be cautious. Market breadth is not that great right now. We do not have full participation. So what's up, swing traders? Snacks here. We're going to do our November market breadth session and our November 4th watch list in the same video. As always, we start with market breadth. Let's jump in. I think we'll take a deeper look under the hood than we typically do in these daily watch list videos, but breadth is a little bit weak right now, and I'd like to show you guys what I see and how I'm planning for it for the coming days, weeks, month, end of year 2025, which I do still expect to be strong currently. You know, that could change any day, any Trump tweet, any macro event. That opinion could change, but currently we do not have enough of a change of character in the charts to suggest anything but a strong Q4. And I still feel that to be coming, but I'm thinking maybe we get a little bit slippery one more time before we get that final year-end push, and that is due to market breadth. So guys, you want to learn to read the room. The current room that I am in spells a bit of caution, and I want to show you guys what I see here. We have the SPY still hanging out up around all-time highs. We got this breakout from prior all-time highs. I like that we are holding the 9. If there's anything positive on this chart, it is that. And the fact that we're basically right at all-time highs. Of course, that is strong, but the fact that we are holding this short-term moving average is another signal of strength. But before we really get deep here on this, I want to explain the 2 scenarios very quickly that I'm looking for. Guys, if this is your first time on the channel, I don't predict, okay? I think that is not a meaningful or worthwhile task to try to predict the markets, to outsmart them, okay? We plan and then we react. I plan scenarios and then I build a trade plan, or I sit on my hands, sometimes based off of what I see coming. It's just a time when you need to pump the brakes, right? Maybe raise your cash position. But again, guys, I don't predict. I'm going to build a scenario and be ready to pull the trigger when one of those play out, okay? It's if this, then that. It's reactionary, not predictive. Do not try to outsmart or outmaneuver the market. Be patient and work with what the market gives you. But understand how to read breadth and sort of see these things coming, all right? So right now, the 2 ideas that I have happening in the market, and maybe I should say 3, but one would be that we curl right off of this 9 and get going back onto trend, or possibly even sideways. But, it would be something, maybe a look of that, remaining above the short-term moving average. It would be very strong. The one I see a little more likely to play out is a retest of this prior all-time high, and maybe even breaching it just a little bit to fill that gap, right? And then I would want to see a very quick remount of that prior all-time high level. Let's stretch this out a bit more, okay? And I would want to buy that signal if we have sector rotation. Right now, as I will show you here in just a moment as we do our quick sector analysis, we are being led by only a few sectors, specifically tech and semiconductors, right? Big tech and semiconductors. We do not have full market participation. And I think it will be a big reason for the deeper pullback to prior all-time highs if we get it, okay? If we get that pullback to prior all-time highs and we see sector rotation, we see money get dispersed into the other sectors as we bounce off of this level, okay? And then remount at that time, you could argue, let's imagine the 9 EMA at that time would be somewhere like that, okay? So I'm extending that red line. And if we get the market, I know that this is getting a little extreme, all of these drawings, but if in that scenario, so let's imagine the possibility, and this is the likely scenario that I see, is that we pull back to this prior all-time high react off of it, remount, quickly remount, get back over that prior all-time high, that significant level, prior resistance now should become support. I don't mind it breaching it quickly, but I want to see it quickly remount. And then at that point, if we then remount the short-term moving average, this 9 that I've drawn over, if we do that, that is a triple R trigger on the indice, okay? And again, let's look at all the times this has happened. Here, 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 here. Okay, this is aligning the market with triple R triggers on our leaders. And when we do that, our hit rate is beyond 80%. Okay, we print money when the indices triple R, and then we have our leaders doing the same. And I think there's something unique happening now because it's been a bit of an ugly maybe market for a little while now, that we have some that might even trigger for us on the weekly, especially if we do get this quick little shakeout in the market back to prior all-time highs. So that is the scenario, obviously, that I'm hoping for in my ability to articulate it. I've been thinking about this, and I'm maybe, you could even say, planning for it. That's what I would like to see. The other would be that we just completely roll over. Okay, I don't think that's going to happen. And the other would be that we just start to push higher from these levels, which without much sector flow, it's just going to be difficult for me to put on too much risk. I'm not saying I won't do quarter size positions on some of these things while they trigger, but between the fact that we're smack in the middle of earnings, and if we just get a runaway market without full sector participation, I can't buy that. I want to wait until this thing rolls over, tests highs, and then triple R triggers on the indice, and hope that we see full participation. If that happens, that will be a risk environment A, and we're gonna make money. So I suggest you be patient and wait for a scenario like that to play out, or at least a little bit more clarity. I would not go full port shorting the entire market. We do not have a broad change in character. The monthly, we have a lot of room here on the monthly that we could pull back into these other prior support zones and still be in a very healthy market. Okay, if we pull all the way back to this prior all-time high level, now I would say this is our new all-time high level that we went under sideways for the last 3 weeks and then broke out off of that positive CPI report. What was it, 2 Fridays ago? But before that, it was down here at the 615 area was our prior all-time high, 613.50. And frankly, on the monthly, a pullback to that range would be healthy market action, okay, if we reacted off of it. So guys, I can't get too bearish until you see something like this on the monthly, where, like, say we break that zone and pop up and make a lower high and then roll back over, you could short this move. Something like that. That would be very interesting. Or maybe even wait for it to make that move, pop up and make another lower high and then push back down again. You would short that move. But if you look at the change in character, the change in structure, when that happens on the monthly, it really does set up pretty nasty times in the market, right? But we just don't have that. You can see we made a lower low here on the monthly. Guys, we're not even close to that. Like, we're miles away from a lower low, even of a previous month, right? But you can see right here the change in character, and what that led to was, it was a tariff thing, but you can see right here the change in character that happened, a big bearish engulfing that got below our short-term moving averages. We're not even close to it. So to get overly aggressively short right here just because Michael Burry did it, give me a break, all right? Because Michael Burry is shorting Palantir and Nvidia, and you think it's a bubble and all these things, I'm sorry, but you don't have that kind of capital to wait to be right. Wait until you get confirmation. And right now, we're just not even close to a bear thesis, guys. So I'm remaining bullish until shown otherwise. All of that to say this, I am concerned. All right, I am slightly concerned with the current market profiles. Let's look at a few things here. I want to pull up our market breadth and look at the stocks above their 50 and 200-day moving average. We are back below that 50 line here on the stocks over their 50. Concerning. And we were back below the 0 line on our high-low index indicator right here. Also pretty concerning. And we're starting to spend a little more time under this than you do like to see. If you align other nasty times in the market, look at the crosshair, okay? Look at this, and then look at that part of the market. Look at how much time we were spending under the 50 line. Let's move this up. Look at how much time we were spending under the 50 line before things really got nasty, and we're starting to do that again, guys. So there is some underlying bearish divergences that we're looking at here. Another, if you look at, again, try to track my cursor on this time in the market and then where it is relative up here on the stocks above their 50, 200-day moving average chart right here. If you look at a time when the market was pretty nasty, that would be right here. You could say this does look like the start of that, okay? This area right here is sort of looking like the current price action. But that doesn't mean that you can just go short the market, because another time that things sort of looked like that would be, right in here, right in here. And then we went into multi-year rallies, guys. Like, you can't just blindly short. You need to wait for confirmation, and that happens by aligning the bearish divergences that we see. That should make you cautionary. Maybe have smaller position sizes, be patient, whatever it may be. Wait for true full market participation, which we don't have. Again, I'll show you that here in just a moment. But you don't have to predict the top. Calling the top is incredibly difficult. Very few, I would almost even stretch to say no one can do that accurately over time. Right? It's too difficult to call top and to market, right? You need to wait for a change in character. You need to wait for then that change of character to confirm, okay? And what does that look like? Let's go to the daily here on the SPY. Let's look at the last time we rolled into a bear market on the SPY. Really start to be right through this area. So it would really be, I would say, back on the Liberation Day marked the beginning, and we rolled into a multi-month bear market. It was very short-lived, and we quickly recovered and went into an absolute ripper that we're in the middle of right now. But, this is a clear change in character, okay? We stopped making higher highs and higher lows, and we made a lower low and then a lower high. Change of character. And then it confirmed on our higher time frames, the lower lows, lower highs, okay? It was very short-lived, but that is what it looks like. So calling the top up here, like, you don't have any evidence or proof of that. It's just, it's silly, okay? Stop trying to call the top. You'll know when we have a change of character, guys, that confirms. All right, keep coming back. I will narrate through that when it happens. If it happens, we're just not there. Although I would suggest being slightly cautious due to the current market breadth right here. It's just not the best look. But guys, we could get right back above this stuff, and we'll just have to go day by day. That's one thing that I see that concerns me. The other thing that I see that concerns me here in market breadth has to be the RSP and IWM. So you have the SPY. This is the market, but it is very heavily weighted towards the Mag 7s. And look at where we are up here at all-time highs, right near them for the SPY. But at RSP, we've been rolling for a couple weeks now. That is a negative. That is a bearish divergence, okay? Not what we want to see. And let's look at our AD line. Looking a little toppy. I mean, you can see that head and shoulders there, right? If you want to call it that. That seems a little head and shoulders-ish for me right there on the AD line on RSP. And guys, like, this is just not a great look here. We need to very quickly get back onto trend and keep up with the SPY here, or it just suggests we're being led by the leaders, and we, again, don't have full market participation. That is obvious, okay, by the RSP lagging. It's not even lagging. The RSP is rolling over. Could that change today? Yes, of course. But currently, it's rolling over. This is a nasty look. And then, of course, you've got these other signals here signaling caution, all right, as we go up in the market, but down in the stocks over their 50 and 200 moving average. It's a bearish divergence. Doesn't mean we can't climb the wall of bears, but you need to notice these things and be prepared and let them help you build that second scenario. Okay, guys, remember our two scenarios. One would be something like this. The other would be something like that. And we're going to make sure that we're not oversizing just in case we do roll over into a correction, okay? Even if we did that. So let's move to the weekly. Look at how much room we have here on the weekly just to retest a short-term moving average. That's okay to do, guys. It's okay to pull back to the 9 EMA on a weekly chart for anything. Guys, relax, okay? But I would just say that means if you move to the daily, that is all the way down here. That's the 50. It's okay to test the 50. And real quick, I want to look at the VIX. That's okay to me. I expected a little bit worse there. I just don't like to spend much time up above 20, 50 area. We're okay there on the VIX. That's a little bit that's sort of confidence inspiring breadth for me right there. The VIX is people long-term, it's leaps, it's long-term puts is essentially, but it measures volatility. But what it is tracking the long-term puts on the market. It's people hedging, it's hedge funds hedging their portfolios by buying out of the money long-term puts is really what gets this thing to start shooting up. When more of those come into the market, right, the VIX will shoot up, and it's a measurement of volatility in the market. And real quick, we'll look at the IWM small caps. Nice reaction here off the 50. If we could get a triple R in small caps, get back out of this zone and onto trend, making new highs, I would love the look of that. Okay, so we'll have to keep an eye on that. That would look something obviously like this. maybe retest and then go up towards highs. Something like that would be quite attractive. But if we keep rolling over here, maybe if we make a new low, right, that would be very concerning, especially if we did something like that off of it. This is just planning the alternate scenario. I think this one is more likely. I would prefer to see this one. But if this plays out, then we need to be ready for it, okay? So that's what I'm seeing there, guys, on the indices. I want to roll over here and see if we got any additional flow into the sectors. Robotics is still pretty strong. Semiconductors, obviously still strong. That is what has been leading this current rally in the market. I would really like to see some dispersion into other sectors. Tech still holding up and very strong. China, did we get a good reaction off of that? I think China back over its moving averages would be slightly attractive. We had the biggest de-escalation of that whole trade war just happened over the weekend. So maybe a little more confidence coming into China. So KWEB is a great way to play that if you don't want to get too choosy or picky. This is like the top tech stocks or internet stocks in China. This over the 50 is attractive, I'll say. Let's see, healthcare here. This is something also. This is not a bad look. All right, we're still holding structure coming out of our change in character. All right, so looking at that, we had our change in character. I don't know why that is so loosely put in there. But this was our change in character as we broke out over that, over the 200. Pull back off of that is fine, but the fact that we were making higher highs and higher lows, we're flagging out here in healthcare, which is the third largest sector that makes up the S&P. You've got tech, finance, healthcare, right? So we need all three of these to be strong. So I don't hate this look here. I haven't looked at healthcare in a week or two. This getting back over the 9 would be attractive, and then continuing to make new highs, right? A push up through that, something like that would be quite the look there in healthcare, and I think it would help push the market higher. These are things that we need to see. We cannot continue to only be led by tech. The other thing that is quite concerning, XLF. This, guys, needs to change. Okay, let me get these old drawings out of here. This needs to change. All right, let's go ahead and extend these lines over. That's our prior range, and we are below it, and we're not looking great, guys. We broke down, pulled back up, failed to 50, and we're pushing lower. We've not made a lower low here on this move, so let's hope this is more a double bottom, right? These two, but I don't know, guys. This does not look great, and we need finance to be a part of a push higher to have full participation in the market. So we need this guy back into range, back above the 50 and pushing to top of range. And frankly, we need it breaking out, okay? We need this guy to pull one of these numbers, okay? Something like that, whatever it ends up looking like, but we need it back in range, back over the 50. We need to hold that level and make new highs and push higher. If the market is going to sustain a longer term move higher, we've got to have financials involved in that move. And this is not the best look here on financials. Let's take a look at the AD here on it. Yeah, we need some strength. Real estate, another one, not the best look. You can see our two scenarios that we've been planning for here. I like that we've not just fully broken down through this range, through the bottom of this range, right? We don't want to see this. Okay, that would be very weak for the real estate sector. Not a big part of the market, right? But if we're going to get rotation and participation, I would love to see it do this scenario here and get back above the 50, test top of range, possibly break out. All right, it's been a long time since we had real estate being a part of the growth in our markets. I would love to see it. All right, and then we've got energy. This is something that I find to be quite interesting with the new re-rating, I would say, of energy stocks because of AI. These things are trading at heightened PEs that are more just not typically, it doesn't suggest the risk off that energy and utilities always was. Because of the infrastructure built out in AI, some of these things, their PE ratios are really expanding. So look, I'd like to see this thing get back over range and actually make a move higher. Something like this would be really attractive. We would want to be buying that, but it's not there. It's mid-range, guys. So there's nothing to do here yet with energy. Financials we just talked about. Materials, that's not attractive at all. Anyways, that's not a great look there. Guys, the entire point here is that we've got kind of broad spread weakness and caution throughout a lot of these sectors. Here's communication, guys. This is made up of some of the biggest tech names in the stock market, and this is not a good look here. Guys, if we break that lower line, right, and do something like this, yeah, that's not going to be a great look for end of year. So what we want is a bounce off of that back over the 50. Imagine that 50 comes over like that, get back over the 50, test top of range, breakout. We want to move like that, obviously, if we are long, okay, or favoring a long thesis. Home builders, another nasty look, guys. Nasty look. Will we bounce off of the 200? We'll have to see, but just nothing to do with this right now. All right, we are mid-range. And then we've got biotech, kind of leading, to be frank, guys. Look at this guy moving off of the tariff lows with the market, but still continuing to push up as most, I mean, you just saw a lot of the other sectors have done this. All right, just they're rolling over or whatever, but they're going down, okay? They're making lower highs, lower lows. Biotech is not, guys. It is in an uptrend still. So, I know this is a longer video, but you need to be able to go in and look at each sector, right, and see where some strength is. There's just not a lot out there right now. Robotics is hot. China looks fine. Tech looks fine. Semis look fine. Healthcare looks okay. Biotech looks okay. But, I need to see financials turn around if I'm really going to lean into an end of year scale of positions. I need full market participation, which we do not have right now. All right, guys. So look, I do have a few stocks I'm going to share with you, but that was the main gist of what I wanted today's watch list to be, is breadth. I think that's far more important, because that is if there's a caution signal for me right now, there is a slight signal of caution. I'm not overly interested in any positions. If we rip higher, I think I'll still wait a little more, at least until I want the RSP back trending. I want IWM back trending, okay? And I want some of those sectors, financials. If we get participation from tech, financials, and healthcare, the three largest sectors of the market that make up the S&P by market cap, if we have all three of those pushing higher, then, okay, cool, I'm in. But without that, then I need the RSP and IWM to give me my signals. And then I also need things like this to stop happening. All right, I need these stocks above or below their 50-day moving average. I need more of them to be above, okay? I need more stocks to be making higher highs than lower lows, right? It's just, this is a little concerning to me, all of this breadth that we are seeing here. I have 5 triple Rs here I want to share with you, but they are all in the weekly. The first one here is PEGA, and this is gapping up big time, I do believe. Yeah, 13% up to 32.40. Right up into our trigger for a weekly on PEGA here that we have been talking about and waiting for a long time. Look at this beautiful cup and handle on accumulation. They had fantastic earnings, more specifically so far the reaction to it, gapping them all the way up here. It's a great reaction to the earnings. I'm somewhat likely to take a starter in this position today. Guys, in Bootcamp, you know how I like to handle these IPO cycles. Okay, I like to get a preemptive quarter-size position on a triple R trigger, okay, below the breakout level. So that would be right in here. I'll get my quarter size here, okay, and then we will let price do what it does, and then we'll let it break out with the idea of a longer term position coming off of the IPO cycle. Last time I looked, though, they did not have long-dated contracts for PEGA. I think the most out I could get was around 6 months. So, we may have to do this trade in shares. If I want to hold something through multiple earnings, then, I like to get leaps, right? So a year or more contracts. We'll have to see. But anyways, guys, the price action, the play here. Quarter size over the 50 and then let it break out, pull back, retest the IPO breakout, and then go up to full size on that move. And then Dash is another one that I want to look at here. You can see the difference. So I trade Dash all the time on triple R triggers, right? I've taken 1, 2, 3, 4, 5, 6 this year. Sorry, that one was last year, but I've taken 5 this year. 1, 2, 3, 4, 5. Profitable on all of them. So it's a frequent trader for me. But guys, I want to make this point. This was a weekly triple R trigger. Let's go down to the 1 week chart here. This was a weekly triple R trigger, and you can see this one trade was bigger than the combination of all my other daily trigger trades here. So we're getting a possible weekly trigger here for Dash on an earnings report, which is when I got into this one. Like, this says they missed earnings. Okay, well, the reaction was positive, and it aligned with the triple R trigger on the weekly. I got into this guy, really had a nice trade on it. But look, guys, it's possible that we get a triple R trigger coming off of an earnings report, aligning with the cup and handle at all-time high levels. Just a lot of things checking out. Back over the 9 on the weekly coming off of earnings is something that is going to work in your favor more often than not. It's on my radar. MP is another one, exact same scenario. We have the possibility here of a triple R on the weekly. Triple R, strong company in a trend backed by growing fundamentals. We wait for them to retrace, react at or around the level, see positioning, and then remount the short-term moving average. It works on the daily, it works on the weekly, the 4-hour. It's market structure. Markets are fractal. It is buying pullbacks within structure, and the 9 EMAs are trigger, okay, for the resumption of trend. That's what I'm waiting for, guys. Look, it happened here. Retracement, reaction at around the level, remount of the 9. Guys, it's beautiful when it happens. We have sort of broken structure here on the weekly, so not the greatest look, but a quick invalidation of that coming off of an earnings report would get us back over the 9 EMA below recent highs. I like that a lot if we get a good reaction to the MP earnings report. And then we've got HIMS, another one on the weekly. I like the idea. You're getting a retracement reaction at or around, well, we haven't gotten a reaction, but we did just have earnings overnight, I believe it was. Nothing significant, like, we're not breaking down, we're not ripping up, but if we get a reaction off of this 50, guys, look at the other times that it is triple R triggered, okay? You get a retracement, reaction, remount of the 9, retracement, reaction, remount of the 9, retracement, reaction, retracement, reaction, remount of the 9 will get me into HIMS likely if I align it with a strong, full participated market. And we've got a few peg plays that I'll have you look at here. To qualify for a peg play, I need a 5 to 10+% gap up. It depends on the market cap, okay? Micro caps, a 5% gap up is nothing, right? But a mega cap, or the real leaders in the market, a 5% gap up can be significant. But I typically like to see a 10% gap up on 200x volume. And I put it in a fixed range volume profile with a point of control, which is this dotted black line. And then you've got the anchored VWAP as you see below here. And I want price trading above both of those numbers, and I want the anchored VWAP to be up sloping. So this little orange line that tracks, I want that to be sloping up, and I want price above it and the point of control. So I think through 269.50 area, this STX is pretty attractive for me for a peg play trigger. Then we've got PEGA here. It's got a little bit of work to do, but getting above the dotted black line and the anchored VWAP would be attractive. But guys, I know I just said that I find STX quite attractive. We just need more out of the markets. I'm just not that interested in entering anything today. I just need to see some of these other indicators flip back to bullish, or as I said, get the main scenario that I'm looking for out of the market, which in closing one last time would look something like this, okay? And then sector rotation, strength throughout the markets, RSP popping off, IWM popping off, stuff like that. Financials catching a bid, getting back into range, preferably back over its 50-day moving average. This thing is starting to roll over the 50-day, right? We want this thing facing upward, right? If we're in bull trends, we want to be above an upsloping 50-day moving average, and we don't really have that in a lot of these sectors. There's some negative divergences out there, all right, that we have to keep an eye on. All right, guys, I know that was a long one, a lot covered and discussed there, but that's where my mind is, all right? Cautious, risk environment C. We are in a risk environment C. Okay, it is what it is, and keep on coming back. If we get that main scenario that I'm looking for out of the market, then we'll put on some trades and look for a strong push into year end. All right, guys, that's it for today. Stay safe, manage your risk. Let's go make some money. I'll see you soon.